Welcome to TradeTheMBI.com. This is John. This report is for the 8th of June. Well, we started to see a little bit of softness within the daily setup here. We've had the rising shakeout moving from, well, decent negative to positive, but above the 50% line, which has brought us to, well, it started out with the new Morganacci high and has created this newer plateau. But we're getting that plateau just at the time where you're getting orange spiking here and a steel falling. Now, that is the beginning of what we would call a short snake, but you got to have the cyan rise above there. Now, if the cyan does rise above, though, you get a secondary problem because it would be doing so above the midterm buyers of green. And then the question is, will the short activation be above zero? So all those things leading together would create a much more significant pullback as opposed to a pause. If we look at the NASDAQ, it's still much stronger. Though you've had these steel cross below, just short-term buyers completely faded out of this, but you haven't seen a spike in shorts or anything like that, or even for that matter, midterm buyers fading. I mean, it's just been a straight line cross as price has been rising going through here. But we're getting a little battle right here. You can see that flipping green and red, and that's because of the move to the ABM yellow right at that particular spot. So it's cool to watch that actually take place. So the euro popped here to 38. It's getting a little softer right now into some of that, well, it's not necessarily overbought. It's just pretty strong move coming off of an exacerbated down run. These tend to happen quite frequently. The Kiwi here would be looking for the next lower shakeout as the beginning of the next downturn, or for that matter, we're already starting to see falling Morganacci highs, which could help induce price more towards the 50%. The question will be, which gets there faster, the 50% down to where price currently is, or a little bit of an elevation that lifts it to it briefly. So we'll be watching the shakeout to see, particularly if it turns around before zero, that would spell new lows coming in. So keep an eye on that. With some wild activity here with treasuries and that. It's quite an interesting mixed bag because you clearly have rates rising. At the same time, you have a flood of people wanting to buy treasuries. And it's just kind of counter to what the actual market is, which is a clear indication that rates should be rising, not falling. We've got the Fed about to deal with moving us, like we said, to at least a neutral yield between inflation and what the rates are. And this is going to have an interesting dynamic because when you get to a certain factor here, it becomes more attractive to be in treasuries as far as safety issue. And then the yield becomes the issue from there. And do you really want to be risking being in equities at all-time highs and that kind of situation? So that could have some broader impact. We'll have to see. We get this turnaround here slightly in oil. Dip below the red line here with the extremes means that a little pop here is likely to fizzle back out. I think that a bit more of a fade would be beneficial, at least from an economic standpoint. That doesn't necessarily mean that's what's going to happen, but it certainly would aid the economy, easing of oil prices, particularly in a labor shortage, because it could sustain upward price momentum in wages without creating significant inflation. The oil rising is usually the fastest way to spell an inflationary spiral. So not yet happening. We'll see how it plays out, though, going forward here. Gold still can't get any motivation whatsoever. It's completely stuck. So it was a really kind of a short day from the standpoint of we had the pre-market momentum going, and then we ended up with the cyan moving above midterm buyers right here. And the green. At the same time, you had the spike of the orange and steel below their plus and minus 13s, which meant we actually had some serious algo activity taking place. And what we did was start to fill back. Oh, all these positive extremes going. Well, we had these going back to here, which conveniently, we also had this one right there, which wonderfully captured the move to the lows. Coincidence? No, but that's okay. It's just fun to see it happen because it does it so often and regularly. Not always within the exact same next day, but more often than not, usually within a compatible range. So they made a little bit of a spike right at the end of the day, and then right as the market ended, spiked up a little bit, but filling that back in. So far under green for the extreme histogram, which means that none of this area needs to be retraced or anything. This is just a matter of selling. We've been in short configuration. It started up again right there when we had that split of the steel below cyan right here, and also it's just that opening of the mouth, so to speak, of the cyan above green. And we would call this a spider effect. Creates the little four legs kind of situation there. But you can see the effect. So broke down below the 50. Once the 50 was taken out, we hit the 23. Whether we hold that 23 doesn't look particularly strong at this particular spot. So we might see a little bit of extended weakness. This particular point, it's a straight downhill line. So it's early though, and all we're doing is filling back in some of those positive extremes we had from before, so nothing too dramatic, well within normalized ranges of what the move's been. So we consolidate just a little bit to finish out the big buy spree from the fund money. So that's the long and the short of it for now. And again, final day of school for the kids and stuff, so that means a lot more concentration on finalizing some details for these programs, which is exciting news. And we'll certainly put up charts as conditions warrant. Trade well.